Good day, everyone. This is Kanbei and Mi Lin from the Research Department at Mirae Asset Securities Vietnam. Today, we'll take you on an insightful journey into Vietnam's electricity sector and explore the exciting investment opportunities within it.
Hi everyone. In recent years, the global electricity industry has seen many changes. So, could you give us an overview of the current global electricity sector, focusing on the shifts in renewable energy, fossil fuel, and nuclear power, especially the key trends that's shaping the future?
Thank you for your question. Driven by environmental concerns and the shift to renewable energy, the share of electricity production from fossil fuels, particularly coal and oil, has gradually declined. Coal-fired power is still the largest source of electricity globally, accounting for 36% in 2023, down from 40% in 2005. Natural gas maintained a stable position in global power production, fluctuating around 22 to 24%. In contrast, renewable energy sources like solar, hydro, and wind have grown significantly, with their shares rising from 18 to 30%. This has been supported by growing climate concerns and technological advances, helping renewable energy become more efficient, accessible, and cost-effective. Meanwhile, nuclear energy share has declined from 15% to 9% in 2023, mainly due to safety concerns from past incidents like Chernobyl and the Fukushima disasters. Now, speaking of nuclear energy, it has become a prominent topic in Vietnam's National Assembly, particularly concerning plans to revive the Ninh Thuan nuclear power plant. Could you share some insights into global trends in nuclear energy development and their potential impact on Vietnam's plans?
Sure. We can see here the nuclear energy development globally. In Western Europe, the role of nuclear energy is diminishing, like Germany phasing out nuclear power entirely in 2023 by closing its last 3 nuclear power plants. Meanwhile, Eastern European countries, due to their proximity to Russia, continue to rely on nuclear power. In the US, nuclear energy contributes around 20% of electricity production. Plans under the Biden administration aimed to triple US nuclear capacity to 300 gigawatts by 2050, though the policies under Trump is still uncertain. This growing focus on nuclear energy is driven by rising electricity demand to power big tech data centers and advancements in AI. And although nuclear energy has faced controversy, especially following, as you've said, the Chernobyl or the Fukushima disasters, data shows nuclear energy is still the safest and most environmentally friendly option, followed closely by renewables. This ranking is based on metrics like death rates from accidents and pollution, as well as carbon emissions. In Vietnam, the electricity sector is facing challenges to meet both economic growth and environmentally sustainability goals. First, Vietnam is committed to achieving net zero emissions by 2050. Second, from 2031 to 2050, Vietnam strives for 6.5 to 7.5 GDP annual growth. According to the Ministry of Industry and Trade, each 1% GDP increase requires up to 2% rise in electricity consumption. This is driven by expanding digital economy as well as data centers. And lastly, renewable electricity in Vietnam is still modest and unstable, while coal-fired power plants dominate its electricity generation. All in all, these pressures make nuclear power a viable solution, providing a stable and large-scale energy source to balance both economic growth and sustainability goals. And turning to the present, Vietnam's electricity output has shown consistent growth, along with recent regulatory developments. So could you give us an update on the current state of Vietnam's electricity sector?
As you said, Vietnam's electricity output has grown steadily, reaching 258 billion kilowatt-hour by October 2024, an 11% year-over-year increase. Coal power and hydropower remain the primary energy sources, and in the first half of 2024, coal thermal power dominated, contributing 68% of national electricity output in February, but the share dropped to 40% by October. From quarter 3, as rainy season began, hydropower surpassed coal thermal to be the main energy source, rising from only 11% in February to 40% in October, peaking at 46% in August to September. The transition to new renewable energy is still in progress, as wind and solar energy contribute just less than 20% to the national electricity output, with a peak of 19% in March. Gas power output was 18.4 billion kilowatt-hour in in the first 10 months of 2024, declining by 19% year over year, accounting for only 7% of total output. For industry outlook, we expect hydropower to perform well into the first half of 2025 as the weather cycle shifts to La Nina, which NOAA predicts will dominate from the second half of 2024 until mid-2025. These conditions will help boost hydropower operations and improve business performance. Conversely, heavy rainfall during this period may negatively affect coal thermal plant performance. Moving on, what are recent events and regulations that we should pay attention to?
Okay, so there are several key events and regulatory decisions have emerged in the second half of 2024. First, regarding the liquefied natural gas power project, in October, PV Power and EVN has signed a power purchase agreement for the Nyunchek 3 and 4 plants, with Nyunchek 3 expected to begin operations in November 2024 and Nyunchek 4 in May 2025. Also, the Ministry of Industry and Trade was tasked to research and develop nuclear power, including small-scale nuclear power reactors with capacity of around 300 megawatt per unit. And finally, the regulatory framework for renewable energy, though it's still evolving, but many policies have been introduced to support the power industry. This includes, firstly, a mechanism for direct electricity purchases and sales between renewable energy generators and large electricity users. Second, is the EVN's 4.8% electricity price increase, which effective from October 11th of 2024, raising the rates to 2,103 Việt Nam đồng per kilowatt hour. And finally, policies encouraging the development of self-produced and self-consumed rooftop solar power. Anyway, moving next, given the increasing coal imports and declining domestic gas production, what are the challenges that Vietnam's electricity sector is facing?
Vietnam's electricity sector is facing the risk of reliance on imported fuel such as coal and natural gas. For coal, in the first 9 months of 2024, imports rose by 31% in volume and 14% in value, reaching 49 million tons and $6 billion. We expect that imports in 2024 will marginally surpass 2020 volumes and hit a new record. Though imported coal prices have dropped 13% year over year, the average price in September was still high at $124 per ton. Regarding domestic natural gas production for turbine gas plants, it is expected to drop 6% yearly. Most major gas fields in the southeast have been used for a while and are in their final stages with few new projects coming up. So, securing a stable LNG supply is becoming a must, but price swings in imported gas make it a challenge for electricity production. Looking ahead, Power Plan 8 outlines 23 gas-fired power projects to be operational by 2030 with a total capacity of 28,924 megawatts. Of these, 7,900 megawatts will come from domestic gas across 10 projects, while 24,024 will be from LNG-fired plants spanning 13 projects. Given what we just discussed, how did electricity generating companies perform in the third quarter and first 9 months of 2024?
Okay, so in the third quarter of 2024, gas thermal power companies showed strong revenue growth. However, the bottom line was dragged down by rising input fuel costs. And for hydropower plants, business results were mixed, as La Nina is still in the early stage. And in the coal thermal group, most of them reported poor results, with losses in net profit, just except QTP due to the rainy season. And regarding diversified energy companies, their diversification resulted in relatively stable revenue. However, their net profit growth varied widely due to their different financial structures. And for the 9-month business results, overall sector performance was poor, with most companies facing moderate to steep year-over-year declines. Hydropower suffered due to a prolonged dry season in the first half of the year, while gas thermal faced higher input fuel costs, leading to lower mobilization by EVN. Meanwhile, coal-fired plants, especially NBP and PPC, reported better revenue, but operating income growth varied across this group. And finally, for the diversified energy companies like GEG and POW, showed more stable growth and operating profits thanks to their less dependence on specific energy sources.
So in general, the 9-month business results of power generating companies were weak. How about their price performance compared to the VN index?
Okay, so share prices of such companies were really volatile, influenced by electricity types that they produce. In Q2, companies like POW, VSH, PPC, QTP outperformed the VN index, supported by new optimistic regulations and solid business performance. However, poor results in Q3 led most of them to underperform the VN index. Only VSH and POW sustained the year-to-date gains, while others turned to year-to-date losses. For example, gas turbines company NT2 was down by 23%, meanwhile a renewable energy leader GEG dropped by 13%. And so, to wrap up today's video, what are your thoughts on the business prospect for the electricity companies in 2025 and which stocks investors should consider?
The electricity sector presents mixed prospects for 2025, as La Niña effect is expected to persist until the first half of next year. We rate hydropower as positive due to favorable conditions. Meanwhile, coal and gas thermal power may face lower mobilization from EVN. Also, we're neutral on renewable energy right now. It has great potential, but it's limited by the current legal framework. In terms of potential stock, we eye on VSH, GEG, and NT2. For fiscal year 2025, we expect VSH's electricity output to be 14% higher year-over-year, reaching 2,124 million kilowatt-hour thanks to the La Niña effect. Net sales will post 2,164 billion VND, an 18% year-over-year increase, and NPAT will be up 98% year-over-year to 700 billion Vietnam dong. Dividend rate is projected at 20%, with dividend payouts rising from 2,000 Vietnam dong per share to 3,000 in 2025 to 2026, thanks to favorable weather conditions and improved business performance. Next is GEG. In 2025, revenue is expected to increase 8% to 2,731 billion, while MPATMI is projected to rise substantially by 71%, reaching 260 billion VND. Financial leverage will gradually decline moving forward, as we assume net debt EBITDA will decline from 5.7 to 4.3 in 2026. Finally, for NT2, we expect electricity output and QC will remain volatile in 2025, given high input fuel costs and shortage of domestic gas. However, NT2's performance could make a strong turn from last year's trough. In our assumption, NT2 will generate 2,652 million kilowatt-hour in electricity output, a 2% year-over-year growth, and QC mobilization will be consistent throughout the year, unlike its absence in Q1 of 2024. Net sales and MPAT in 2025 will be 6,170 billion and 131 billion each, and a 10% dividend rate equivalent to 1,000 VND is anticipated for 2024, yielding 5.2%.
And that also brings us to the end of today's video. We look forward to sharing more valuable insights with you in our next edition. Thank you for watching.